So Hussein Sayed, research analyst at FXTM, and Simon Brown, founder of Just One Lab, join us on the line now as we unpack this market picture. Hussein, let's start off with you. Good morning indeed. It's been an interesting picture of late, but now there might be some focus on that Brexit deal, which does look to be falling by the wayside. How much impact is that going to have on the markets?
Good morning. Yeah, that's true. Today, probably Brexit will be making most of the headlines. I think there still remain the downside risks, especially to UK assets, despite the recovery we have seen in the pound. I believe that the rise in the pound just over the past few days is not justified. It's kind of maybe buy the rumors, sell the facts. There are different scenarios that can play out today with the vote. So let's assume that the vote is defeated by more than 100 votes. As expected, I think this should be a sell signal for the pound. I mean, what matters is after the vote. So which scenarios will prevail, which scenarios will be playing out. So are we going to see such a no confidence vote in the government, or probably one of the attempt by Theresa May to secure a concession from the EU, or would there be an extension of Article 50? Or probably even we have some kind of extreme scenarios, such as maybe general election or maybe a second referendum. So each of these scenarios will have different outcome on UK assets and maybe European assets in general.
Has the trade war sort of fallen by the wayside almost?
I mean, after the U.S.-China trade talks concluded just last week, it was on a positive note, with both sides of the spectrum describing the dialogue as a good one. But, for the positive momentum to resume on trade talks, we still need these talks to be followed up with more senior levels. This won't be a simple negotiations, as we all know, and might take months or even years to be resolved. So what we are looking now is not for a statement that everything will be fixed in the short run. However, the market just needs some kind of assurance that the situation won't get worse. And this is probably sufficient to keep the markets calm for now.
Yeah. What else would you be looking for, though? I mean, we've had weak Chinese data. Yes, now it's earnings season out in the United States, which is perhaps the key movement that you're perhaps looking at the most right now, Hussein.
I mean, that's true. Despite the recovery we've seen in Asian markets today and overall sentiment, risks remain under somehow downward pressure after yesterday's disappointing figures from China. And also we have some weak euro area industrial production. So more of such disappointing figures will undoubtedly fuel concerns that, yes, we are in a synchronized global slowdown, and this is underway and possibly escalating. So that's why it's difficult to see the positive momentum resuming unless we see more that macro data improving. So as for this week, other than the Brexit, I'll also be focused on the earnings. This is a very important thing, especially from U.S. banks. The investors need to keep eye on the loan growth of these banks, because they do reflect confidence in the overall economy, and increase in the provisions as well for these banks, because it shows that now, yes, banks are being worried, and some other aspects like M&A activity and how the shutdown could be also impacting the real economy. So this is what I'll be focusing on for this week as well.
Yeah, Hussein Sayed, appreciate your time, but research analyst at FXTM.